everyone. My name is Prajakta Bapat. Today we'll be discussing one topic from cost accounting, that is standard costing. So let us see what a standard costing is. First of all, what is standard cost? Now we all have learned what is cost and what are the elements of cost. What is standard cost? Standard meaning benchmark which is set, predetermined cost. So every manufacturing concern or every companies set their limit or a benchmark, meaning standard performance, that we will be spending only this much amount for this particular element of cost. For example, for material will be spending this much cost, or for labors will be spending this much cost. Likewise, now, this is called as standard cost, meaning the benchmark or the standard which is set by the companies, or the limit which is set by the companies. Now, what is standard costing? When it comes to once you decide the standard cost, okay, it helps us to know whether we have performed actually in the same way or not. So once the standard is set in the initial time, when you actually perform, when the actual cost is incurred, it is compared with the standard cost, and then you come to know the difference if there is any. So that variance, that is called as variance, or the difference or the change. So if it is more, meaning actual cost spent is more, then it is not good, it is negative, it is adverse. And if you could save something, if your standard cost is more than the actual cost, then it is always good because you are spending lesser, right? So that is called as standard costing. So this is one of the technique or one of the tool of cost accounting which helps us in cost control. How it helps us to cost control? Because it actually, because of standard costing, you plan out the activities. It helps in planning. Initial time itself we will be planning that how much cost I have to set, meaning we decide a budget, we decide a standard set of limit, okay, how much I'll be spending and how much I will be incurring on this particular element of cost. So even if there is any difference in the standard and actual, it helps us to know the difference, or it helps us to know the causes of that difference. That's why standard costing is helpful for us. So these are the stages of standard costing. It revolves around three things. Okay, first is preparation and uses of standard cost. So first we decide that what will be the standard cost for my company. After that, we will, once the actual cost is incurred, we will compare the standard and actual cost. And then third one, if there is any difference, you will analyze it and try to find out the causes. So once you know the causes, that causes can be avoided, that reasons can be avoided while performing it for the next time. So what will happen? You will automatically, we will be able to control the cost. Okay, so these are the three stages. Now variance is, it is called as, even standard costing is called as variance analysis, because you analyze the variance, you analyze the change. So it is difference between standard and the actual performance. Okay. Now there are some formulas given here, formulas in the sense, there are, these are actually, this helps us in analysis. So if actual cost is more than the standard cost, it gives you adverse variance. Meaning, for example, if I had decided initially that I'll be spending maybe 10,000 on my material, which will be buying out, and actually you spent 12,000 rupees. So it is, actual cost is more than the standard set. So it is, will be adverse variance. Just opposite to it is actual cost is lesser than the standard cost. It will be favorable variance. Why favorable? Just consider that you had set that I will be spending 10,000 on material, and you have spent instead of that 8,000 only, which is always good because you could save 2,000 rupees, which is considered as a favorable variance. Coming to the next. Now next is given for sales. So the way I consider a standard for cost, same way we can consider for the sales as well. Okay, so we'll be deciding, we'll be budgeting our sales, and we'll be comparing it with the actual performance. So if your actual sales is better, if your actual sales is more than budgeted sales, it will be considered as a favorable variance. This will be opposite, because if your sales is more, it is always good. And if your actual sales is lesser than the budgeted sales, it will be considered as the adverse variance. So these are the types of variances. Now standards are set for these four specifically, these four elements. Three of them are cost and one of them is income. So material variances, labor variances, overhead variances and sales variances. So in this video we'll be discussing material variances. So if you see, there are total 5 types of material variances. This is the main material variance, material cost variance. There are two variances, material price and material usage. These three are main variances and these two are called as mix and yield are called as sub variances. Okay, so let us understand what is material price, what is material usage. So if though you consider material, labor, overhead, sales, whatever it is, there are so many elements which has influence on material cost. Let us take an example of material cost. If I consider today that if I want to set up a standard today that for material how much I'll be spending. So randomly you will not decide that I'll be spending 1 lakh rupees. You will consider the market situation. You will consider that how much quantities I require, how much quantity or how many units I require and at what price I'll be able to get that. So obviously when you are considering it, either you can consider today's price per unit of material or you will estimate what will be the price tomorrow and then you will consider that price. So mainly in material there are two elements which are considered while calculating variances, that are first is price, material cost and second is quantity. How many units are I am going to buy and at what price I am going to buy those, right? So these two things will have impact. For example, today I decided I'll be spending 1 lakh rupees and I considered suppose 10,000 units at 10 rupees each. Now this 10,000 units, there may be change in 10,000 units, maybe because of any reason when this thing is actually happening, when actual performance is taking place. At that time, instead of 10,000, you may buy 12,000 because there is more demand at that time. So more production is required or lesser demand. So I'm considering only 8,000 for buying. Same way there may be a change in the price as well. Today I had decided at 10 rupees I could buy, but what actually happened till the time when I actually bought those goods, price had become 12 or 13 rupees, right? Because of that also maybe you have adjusted it somewhere in the quantities. Instead of 10 you have bought 8,000. That also may happen, right? Meaning these two things may have main influence on your material variances. Okay, so let us understand one by one these all variances. First is material cost variance. Material cost variance is simply the difference between what cost I was about to spend today, meaning what standard I had set today, for what limit I had set today for material cost and what actually I have spent in the actual performance. So as I said ki I had decided today 1 lakh rupees for spending for material and in actual way, in actual performance I spent 1 lakh 20. So difference between these two will be considered as material cost variance. So there is formula given SQ into SP. SQ in the sense standard quantity into standard price minus actual quantity into actual price. So this is nothing but cost. Quantity into price becomes total cost. So this is standard cost minus actual cost. That is your actual formula. This is the main material variance, total material variance you can say. Now there are subparts of this. Material cost variance has two parts, price and usage. As I said, there are two elements which are considered. One is price and another one is quantity. So according to that, there are these two variances. Let us understand material price variance. Now price variance meaning the name itself suggests. Price variance meaning change in price, right? So there are two factors, price and quantity. So if there is change in price, that means quantity remains same, right? So we will analyze the change in price. So what will be your formula? material price variance is equal to actual quantity will remain same into bracket standard price minus actual price. So I am finding out the difference between price because there was only change in price. Price variance meaning change in price only. Quantity remains same. That is actual quantity. Then next comes is material usage variance. Now what is material usage variance? Change in units, change in quantity, change in use. So quantity, there will be a difference. So standard quantity minus actual quantity, difference between quantities, and price remains same. Standard price into bracket SQ minus AQ. So difference between usage. So obviously difference between usage plus difference between this price variance will give you cost variance, meaning material price variance plus material usage variance, you will get the answer of cost, because this is total cost and these are two elements of cost itself. So once you make the total of these two, you will get material cost variance. Now price is done. Now let us see about the usage. These are two sub variances, material mix variance and material yield variance. Okay, but these two sub variances will be applicable only if you have more than one type of material for one production, meaning one production of one goods. Say for example, if I want to produce material X, okay, any finished goods X, so I require 2-3 types of material, because it usually happens, for producing one unit final product, you might require different types of material. So you require 2-3 types of material. Then only this material mix and material yield will be applicable. If there is only one material required, then these two subvariances will not appear. So let us see material mix variance. Now again the name itself will suggest you mix variance, in the sense, suppose there are two types of material which are required for finished goods. Now what I did is, when the standard was set, I had decided that I will be using, suppose there are XY materials I require. So I decided that X I will be using 70% of total material, or 100 units. Okay, just for the sake of convenience, I am using percentage, just for giving an example. So I decided that 70-30 will be the ratio, meaning X and Y I will be using in this proportion, 70 and 30 percentage. Now what happened is, when actually production took place, at that time something different happened, maybe because X material was not there, or Y material was excess, or uska requirement ज़्यादा हो गया at that point of time. So I used it in 60-40 ratio. Okay, instead of 70-30, I used it in 60-40 ratio. So there will be change in the material mix variance. There will be change in the mix. Okay, instead of using 70-30, I have used it 60-40, meaning combination has been changed. There this material mix variance is applicable. So what is your formula? Again, this is related to quantity, because this is subvariance of usage. Okay, so quantity will get changed, meaning price will remain same. Okay, standard price into bracket RQ is revised quantity minus actual quantity. Okay, next is material yield. This is also a part of usage only. This is like a difference between standard yield specified and actual yield. Yield is output. So what was decided as a standard and what actually happened. But this is also applicable when you have more than one material. So formula is, again, this is a part of usage. So quantity, there is a difference in quantity, price remains same. SP into bracket SQ minus IQ, standard quantity minus revised quantity. What is revised quantity? That will be learning while solving sums. So what is the takeaway from this? Material cost variance is your total, meaning main variance. Material mix and yield, if you make a total, you will get usage. Usage plus price, you will get material cost variance. Okay. Thank you. In the next video, we'll be discussing about labor variances.